Strait of Hormuz crisis, why you're paying more for gas. Right now, there is no confirmed deal with Iran, no final agreement, no clear resolution, and yet, gas prices are already moving. Not next month, not next week, right now. So the real question is not if this affects you, it's how much it already has. Because while most people are waiting for headlines, the market has already reacted. And that reaction is already hitting your wallet. Today, I'm going to break this down clearly. What the Strait of Hormuz really is, why markets react before anything actually happens, and how a situation thousands of miles away is already changing what you pay at the pump. To understand this, you need to step back and look at the bigger picture. The global economy runs on energy. Every truck delivering goods, every plane crossing continents, every supply chain depends on fuel, and fuel depends on oil. But here's what most people don't think about. Oil is not just produced. It has to move from production sites to refineries to distribution centers and finally to your local gas station. The entire system depends on stability. And when that stability is questioned, prices react. Now let's talk about the critical point, the Strait of Hormuz. This is one of the most important energy choke points in the entire world. A narrow stretch of water, just over 20 miles wide at its tightest point. And yet, around 20% of global oil supply passes through it every single day. Think about that. 1 out of every 5 barrels of oil depends on this one route. Countries like Saudi Arabia, Iraq, and the UAE rely on it to export their oil. If that flow is interrupted, even partially, the entire global market feels it immediately. As of now, there are ongoing tensions in the region. There are negotiations. There is political pressure. There are strategic movements. But there is no confirmed agreement. And that uncertainty is exactly what moves markets. Because markets don't wait for certainty. They move on. Risk, probability, and expectations. Even the possibility of disruption is enough to trigger price adjustments. Here's where things get interesting. Most people think oil prices move only when supply changes. But that's not how markets work. Prices move when expectations change. If traders believe that supply could be disrupted, they don't wait for confirmation. They act immediately. This is known as a risk premium. It's essentially the market saying, there's a chance something could go wrong, so we're pricing that risk now, and that adjustment can happen fast, sometimes within hours. Now let's go deeper, because this is no longer just about oil. It's about economic pressure building over time. As tensions continue, analysts begin to look at broader impacts: government spending, military logistics, energy costs. All of it starts to add up. Some analysts suggest that prolonged geopolitical tension can significantly increase financial pressure on government budgets. At the same time, fuel prices in several regions have remained elevated, with gasoline hovering around or above $4 per gallon. And that matters because when fuel costs rise, consumer behavior changes, spending slows, transportation becomes deemed more expensive, businesses adjust prices, and that pressure begins to spread through the entire economy. Now let's bring this directly to you. Gas prices don't just reflect oil, but they reflect a chain of costs: refining, transportation, distribution, and expectations. So when oil prices move, gas prices follow, and sometimes they move even faster than expected. That means you could be paying more today, even before any real disruption occurs. Not because something already happened, but because something might happen next. Think about this moment. You pull into a gas station. Everything looks normal. Same pump, same process. But when you finish, you look at the receipt, and the number is higher than expected. Nothing around you changed, but something far away did. And that change traveled through markets, through supply chains, and landed right there in your total cost. From here, there are several possible outcomes. If tensions ease, prices may stabilize. If uncertainty continues, prices remain elevated. And if disruption actually occurs, prices could spike rapidly. And when that happens, it won't wait for headlines. It will show up first in what you pay. This is how global events really work. They don't stay in politics. They don't stay in headlines. They move through markets and into your daily life, into your expenses, into your decisions, into your financial reality. So, the next time you see gas prices rising, remember, it's not just supply and demand. It's geopolitics, uncertainty, and timing. If this helped you understand what's really happening, share this video, because this affects everyone. Hit like so more people can see it. And don't miss the next video. where I'll show you exactly how to protect your money when energy prices rise. Subscribe and stay in control.